Hey, what's up guys? My name is Daniel Lopez with Invest in You Finance, and today we are going to be talking about budgeting. Budgeting is the first thing that you need to do in order to become financially independent. It's like the base foundation of everything. So that way, once you learn how to budget, then you can save money, invest money, and know how much money you're going to be able to invest and save. So right away guys, I got an example here on the board. Let's jump right into that. But before we do that, please subscribe. I appreciate you guys stopping by. I have so many videos out there. Whenever you get a chance, go check them out. But let's get into the calculation here. For this example, we're going to talk about someone who is making a salary of about $40,000. And I went to a website called paycheckcity.com. On that website, you can put in your salary and it'll come up with the gross pay, the federal withholdings, your taxes, your Social Security, and your Medicare deductions from your paycheck. So that way you can budget according to how your paycheck it'll closely look like this. So I went to paycheckcity.com and then I put in a salary and this is what we got. So gross pay is going to be $3,333.33. That's just 40,000 divided by 12 because for this example we're saying that you're getting paid monthly, just so we can calculate the monthly budget. The federal withholdings, which are the taxes they're going to take out, are going to be $253.37. Social Security $206, Medicare $48. So after they take out these deductions from your paycheck, you're going to have a net pay of $2,824. And that's the amount that you're going to take home. That's the amount that your job or your work is going to deposit into your checking account. So for this example, let's say that this person has these expenses down here. Because whenever you calculate your budget, you're going to want to write down all the expenses that you're paying for, whether that's a gym membership, whether that's your Netflix account, everything that you're paying for that month, so you can add everything up. For this example, I said food is going to be around $500 a month. And whenever you calculate your own budget, you are going to have to add up all those grocery store runs, everything like that. So I just put $500. Your electric bill may be high or low depending on where you live, things like that. I just put $200. If you're someone who likes to keep the air conditioner at 69 degrees, your electricity bill might be a lot higher. So I went with $200. The gas is going to be around $50, just an average price. Water, same thing, around $50. And then your rent. I put that this person is going to be renting for around $1,000. And we're saying that this person lives in Texas and they don't have any income tax withheld. If you live in a different state, you may have income tax withheld. So on paycheckcity.com, you can account for which state you live in and it will adjust your net pay accordingly. So getting back to the expenses, and then I put your car. So I put that this person had a car payment and insurance payment of $300. For this example, I said that this person is using a used car, and that used car was $10,000, and the payments on a $10,000 car for 5 years at a 6% interest rate, used car, are around $200. I made that calculation in another video, so I'm just sticking with $10,000 finance for 5 years at a 6% interest rate is around $200 a month. Plus insurance, I put that at around $100. So the total is $300 for car and insurance. Gasoline. So the way I calculate gasoline is you calculate the average amount of miles that you're gonna drive in the year. Usually the average amount is around 12,000 miles. So if you divide 12,000 miles divided by how many months there are in a year, then every month you're driving around 1,000 miles. If you have a car that gets 20 miles per gallon, then you divide the miles by how much miles per gallon you get. So 1,000 miles divided by 20, you get 500. And then you multiply 500 times how much the price of gallon is, how much the price per gallon is. So $4. Sorry, so it's 1,000 divided by the miles per gallon, which is 20. You're gonna get 50. So 50 times 20 is 1,000. So you're gonna get 50, and you're gonna multiply 50, that's how many miles you get, times the gasoline price, which is, I'm saying $4 per gallon. Some places it might be 5 or 6. Once you multiply that out, 4 times 50, you're gonna get $200 because your car gets 20 miles per gallon. So you're gonna be spending around $200 per month. And then I put cell phone plus your internet. Cell phone, I went a little bit high, around $100 per month on your cell phone, and then the internet bill for wherever you're living, maybe you have to pay another 100, so I put 200. So these expenses are quite pretty high, but we're just gonna keep rolling with it, and we're gonna calculate this person's budget. So we know that the net pay after your deductions for the state, Social Security, Medicare is $28, $24, $96. Your expenses, once you add all these up, you're gonna get $2,500. And because you may get health insurance at your job, I didn't know what to put as far as the price, because it could be, it's not required by law currently, so you don't have to have health insurance. In some states, you might have to have health insurance, and you'll have to figure that out before you're doing your taxes to see if you're required, depending on what state you live in. So for health insurance, for easy math purposes, I just put that it was around $124. Of course, if you have it through your job, it might be anywhere from, $15 to $50. But let's just say health insurance, again, we're going on the high end here. Health insurance is $124.96, just for easy math purposes. Once you subtract the $2,500 from the $28, $24.96, and you subtract the $124.96, the money left over after all these expenses and everything here is $200 left. So this person is pretty much maxed out on their salary with everything that they're paying for. And this doesn't include, the food is just, I'm including groceries, and I'm not including, restaurants, Starbucks, extra things like that, going to the bar and having drinks. I'm just saying that this is $500 a month for groceries. This is just a single person. Of course, if you have a family, then, your numbers may be bigger, or if you're married, you could combine your salaries and then figure that out. But we're just doing someone who's single, making $40,000 a year, who lives in Texas and does not pay state income tax. So the money left over is $200. That means that they can use that $200 for whatever they like. That is their spending cash. That is for buying a PS5, or that is for buying a TV. It's all they have left after their expenses. And the reason why this is important is because until you do this, most of us, we're just swiping that credit card. We're just swiping, and we're not really calculating, hey, how much am I really spending? It's not until we dig ourselves in a ditch and our credit card balance is negative that we're trying to get help. Well, this is so that way, before you get into that negative credit card balance, this is just to help you figure out where you're at as far as how much you're getting paid, your income and expenses, and then you can adjust accordingly. $200 left over. I mean, that's not enough money. That's not enough money at all, because we haven't even said whether this person's contributing to retirement. With $200, I mean, this person could contribute $200, but you know, they're not even, right now this person isn't going out, isn't having drinks on the weekend, isn't having Starbucks, because all they have is $200. So in reality, if you have $200 left, you could probably go out once a week for the entire month, meaning you'll have $50. If you divide this by 4, you'll have $50 per month to go out, have drinks, and have like appetizers. So that would be the budget of somebody living with a $40,000 salary, having had all these expenses. And to have the discipline to only go out 4 times a month is very rare, I think. Is it doable? Yes, it's doable. It's doable for someone who has a plan, someone who has a goal in mind, someone who's trying to maybe save money, or someone who's trying to invest money or invest for retirement. So this is how your mindset has to think. It has to think, okay, I'm not saying go back and do like the past 5 years of all the money that you've spent and expenses. Just do it for the previous month and just calculate, okay, how much am I spending all month? And just start categorizing everything. Check out your paycheck. How much are they depositing into your check? That's how much you're getting. And whether you're contributing to your retirement or 401k, whatever the case may be. We're assuming this person is not contributing anything, and all they have is $200 left over. So total at the end of the year, if they live like this for 1 year, they're gonna have the $200 times 12. That means they're gonna have $2,400 that they've saved in their pocket, in their savings account, if they decided to not spend this money, never go out, only stay home, and these are their bills. So once this person figured out that they only have $200, now they're wanting to realize where all that money's going. So the highest expense automatically is rent. Rent is the highest expense at $1,000. The second thing is food. And like I said, I just put $500. I don't know if maybe you're spending less or more, but I think maybe $100 a week on food or groceries is a decent amount. But then again, that just depends on where you live. If you live in Hawaii or California, your weekly expenses on food are gonna be a lot higher because food costs more compared to if you're like in Texas, maybe it's $100 a month is $100 a week is good. So that would be $400. So I just went 500. Could be more, could be less. But in this situation, these are the 2 highest expenses. So before you even get into investing, before you even get into setting aside money from your 401k, the normal like financial wisdom or the normal whatever you want to call it, what people recommend is to have 6 months of your expenses in cash, just in case for like an emergency. So you want to have a fund, an emergency fund in place, because if something happens, you need to be able to pay these expenses for at least 6 months. So that way you can get back on your feet, find another job, things like that. So that's before you start investing, before you start trying to retire earlier, become financially independent. And who knows, like this person may have debt. In this situation, I'm not saying that this person's in debt. Let's just say that they come out no debt at $40,000 salary. Well, if you multiply your expenses times 6 months, you come up with 15,000. You're going to need, I'm not even including health insurance because, you know, maybe if you have this emergency fund, you're not going to have health insurance, or you will. I just, for an easy calculation, I decided not to put health insurance, but you would need that if that's what you want to do. But this is just like bare bones. So your expenses are total 2,500, all this, not including health insurance. If you multiply the 2,500 times 6 months, you're gonna get 15,000. So you will have to have a fund, an emergency fund of $15,000 just saved up in case something were to happen and you need to pay your bills for 6 months. That will last you. And all that will give you is money left over of $200. Well, not even that, maybe. That's just your expenses, because you're not getting paid anymore, so you won't even have this $200. You just have 15,000 saved up. All that will cover is your expenses. So you're gonna wanna have that saved up. And the whole purpose of this calculation is to figure out, okay, how can I get the $15,000 emergency fund saved up? Or how can I get $15,000 to have just in case something were to happen? Well, right away, if you're at your $40,000 salary job, your plan is to save $15,000. The money left over is $2,400. So that means you're left with $12,600. You have to come up with $12,600. Where are you going to get the $12,600? So what you're going to want to do is you're going to want to look at your situation, your expenses, and you're going to want to start figuring out, where can I reduce my expenses? The first thing that comes to my mind is your rent, because that's the highest expense. Your rent, if you can reduce your rent, and the only way you're going to reduce it is probably by getting a roommate and splitting an apartment with your roommate. If you can get an apartment for $1,000 and you split it with your roommate, then you guys both will pay $500 each. That would be like my first recommendation. So you would try and knock this down to like $500. If that's optional, that might take 6 months to a year to do, but that's your highest expense. So think about that. Think about if you're willing to live with someone else and have a roommate to knock down this expense. And then the next thing I would look at is the internet. If you get a roommate, that roommate will pay half of the internet bill. So if the internet bill is $100, then they'll pay $50, you'll pay $50. So that means that you get to save $50 every month. So that will be for the entire year. So if I multiply this times 12, that equals $6,000. And then $50 that you saved from the internet because you got a roommate now is times 12 equals 60. So that plus that, you're gonna get 6,600. And that'll be 6,600 that you saved because you said, man, I'm not gonna have enough money left over with $200. It's gonna take me forever to save the $15,000. So boom, 6,600 just freed up because you got a roommate. So now you subtract, that 6,600 and you're gonna get 6,600. $6,000 left. So you have to come up with another $6,000. And this is where your entrepreneurial mind is going to come in. This is where your business savvy mind is going to come in. This is where your creative thinking is going to start flowing, because you need to start thinking of ways to make money. How can you get $6,000? How can you get $6,000? Well, right away, like You've been seeing, Lyft or Uber ads popping up on your phone. You're curious. You've been seeing DoorDash popping up. And maybe you've even talked to the people who are driving you around and you've just had a conversation saying, hey, how much do you make? And most of them will say something like, oh, I have a set limit in my mind that I try and make every month or every week. And then once I hit that, then I quit and I, just continue to live my normal life. Well, let's pretend that to hit the $6,000, if you divide that by 12, then that's $500 every month. So let's say you are willing to take on being an Uber driver or a Lyft driver or DoorDash. Let's say you can get that $500 every month. That would give you $6,000. And by getting that $6,000, you will get your emergency fund of $15,000 in place. But do you see what you had to do? You had to reduce your expenses in your budget, and you had to come up with someone who's going to be your roommate to do this. And the only other way to do this is to increase your income. And by working for Uber or Lyft or getting a side hustle, I'm not saying to go work for Uber or Lyft. I'm just saying that's like an option. That's maybe an option if you can do it, if you're interested in doing that. But yes, use your mind, use your creative thinking, and think about where you're gonna get that extra $500 to come up with $6,000. Because that's all you need. Once you do that, then you'll have your $15,000 fund, your emergency fund. It took you a year to do this, to get $15,000 with a $40,000 salary. Were you willing to not spend $50 a month, because the money left over is only $200, and I mean, you're just taking care of like basic bare essentials. This is like not like someone could blow $200 in one weekend, easy, like no problem. And then after that one weekend that they blow it or that they use it to go out, then they're done. All they have enough money left for is their bills. And this is where the credit card companies make all their money, because they're gonna sucker you into getting a credit card. You're gonna just swipe, swipe, swipe. You're not gonna create a budget. You're not gonna create your expenses. And you're just gonna keep spending, paying the minimum payment. Or maybe you're not. Maybe you can control your spending, but this is how those credit card companies get you. But this is what a budget is going to look like. And you're gonna wanna establish an emergency fund based on your expenses. So this is just one option. If you're a college student, or someone who's still living at home, I suggest you highly, highly, highly start looking into what your personal budget is. Because if this situation was someone who just graduated college, who was making $40,000 a year, and they decided, I want to get a new apartment, I want to get a new, not new, but I want to get a used car for $10,000. I highly recommend, and I beg you to please go get a piece of paper and pen, write up your expenses so you can see with this $40,000, if you move out of your parents' house, you're only gonna have $200 left. And then that might make you think well, what if I just stayed living with my parents? And that's to me the ultimate house hacking. Forget buying a rental property, living in one unit, renting out the rest. You just live with your parents, and for 1 year, you're gonna save. You're not gonna have any rent, period. So rather than having a $1,000 a month rent, right away, bam, you save $12,000. Your first year that you got out of college, assuming you have no debt. So that would be a way to, just like that, get $12,000. You continue living with your parents, you do not move out, and that's your emergency fund right there. You You gained experience at your work, you stayed with your parents, and you saved $12,000. And maybe you saved even more because you're not paying for your electric, gas, water. I mean, of course you'll be making some money, so maybe your parents are gonna wanna have a little bit, and you're probably gonna wanna just be grateful and help them out however you can. But all I'm saying is, real quick, if you just stay with your parents for an extra year, that could potentially save you another $12,000, which is closer to this $15,000. And that's just one way of thinking about it. I made a video on the ultimate house hacking, and the ultimate house hacking for me was living with my parents, and I did this for 4 years. Doing it for 4 years allowed me to save, a tremendous amount of money, because not only was I saving that money, I was investing it. And that money, like with compound interest, just grew and grew and grew and grew and grew. And it was, on the video I think I show, for 4 years, it's up to like $30,000 or $40,000 that I saved up. I saved up more, I'm sure. I would have to go back, look and see at my statements, but think about it. Just think about it. So the only other way to get your budget higher is to obviously make more money. And this is where you start thinking of ways to make more money. What can I do? Can I go on Fiverr and offer services to somebody where they can pay me? How can I make extra income on top of this? If that's something that you want to do. Or how can I reduce my expenses? That's the only way to get out of a situation where you're spending too much money and you're not able to pay your bills. The only way is to increase your income or reduce your expenses. This is just an equation. Your life, your budgeting, your expenses, it's all just an equation. And unless you write it down and do calculations, then you're never gonna have a picture worth 1,000,000 words that's gonna tell you, like, slap you, hey, look, you're only left with $200. So guys, I hope you guys do a budget. If you're not interested in doing it, at least just try it to see where you're coming out at the end of the budget and what it looks like your spending habits are. If you could just save money somewhere to invest or create an emergency fund, then that's always a positive thing. But anyways, guys, this is just an example I wanted to show you guys for budgeting. There's apps, there's all types of things out there that can help you out. I just wanted to do it on the board real quick. Anyways, thank you for chiming in. I appreciate you guys coming. Please smash the like button. Please subscribe. Take it easy and have a good rest of your week. I'm not a financial advisor. This isn't financial advice. Please consult with your tax professionals, your CPAs, and this is just for entertainment purposes only. Thank you guys. Take it easy. And I'm going to continue with another part to this on how to save and invest. If this person saves up to $15,000 for the emergency fund, what would be the next step? The next step would be, hey, I want to start investing now that I have my emergency fund established. So if you guys are interested in that, or you guys are interested in budgeting, write some comments. Let me know what you guys think. Is this realistic? Is this not realistic? Am I missing anything? What would you do? What would you recommend? And then we can have some conversations in the comment section, and that'll be great. But just think, if you had double this, then pretty much all the numbers would be double. Of course, whenever you make more money, you tend to spend more money, and your rent may be double because you have more money, you can get a nicer place. But it's not about the salary. What it's about is the expenses, and if you can reduce them. Because someone who lives on a $40,000 salary could be saving and investing more than somebody who has $100,000. It just depends on their expenses, how much they're saving, how much they're investing, if they're living with their parents, if they're not living with their parents, if that's even possible. And if you can't get a roommate, if you can't live with your parents for some reason, or that's not an option, then when those options are out, the only way to get more money is to find a side hustle, start a business, do extra hours at work, things like that. Then that will increase your income, which will allow you to have more money for your budget, and will allow you to have more money left over to go do things. I think this is a tight budget. Are these numbers correct? They could be, they couldn't be. This is just an example. Write your own numbers down. See how much, check out your credit card statements. See how much you're spending and where you're coming out. And maybe this is the reason why you have all this money left over at the end of the month, or maybe this is the reason why you're not having enough money left over. So you're overspending on your expenses. Anyways, guys, this is a good example, and this is a good strategy and exercise to go ahead and try on your own. I challenge you guys to do that. But anyways, thank you guys for coming. Take care, take it easy, invest in you, and catch you in the next one.